Hello, everyone. Thank you so much for joining us today. I'm honored to be sitting down with Thierry Gilgen. He's a seasoned trader and CEO of automated trading platform MachinaTrader. Thank you so much for joining us today, Thierry.
It's a pleasure. Thank you very much for having me.
So I'm curious, as a seasoned trader, what has that entailed, and how did that lead you towards creating the tools that MachinaTrader provides?
So I have to correct a little bit. I would say I am a very enthusiastic trader, but I wouldn't call myself very professional because I have never worked in the profession in my life. What I basically do as my main profession is the digitalization, and my focus is on IT infrastructure in general. So I know how to take real world problems and successfully get them into some technical form that actually works. So that's my profession. And I think when I've looked at the trading industry and specifically what happened in crypto, this was a great opportunity. It still is today. Nothing changed in the time I started to get into this. And what we actually do is build the perfect infrastructure to be able to do the trading in the fashion that makes sense.
I think that there are unbelievable opportunities available in cryptocurrency for trading. My personal opinion is that Bitcoin is like the new US dollar. It's the stable. When you're in Bitcoin, you're sitting on the sidelines. So I'm curious, like, what approaches to trading did you and do you find most intriguing and why?
Well, I would say, of course, there is a very interesting and sometimes intriguing ways how to cut some slices off the market. Personally, I do not believe that it is the way to kind of go with the holy grail theory. So I usually I'm a friend of a good mix of different strategies that I execute on a bunch of markets where I think I have a certain feeling for. Let's say it like that. But realistically, the most intriguing ways to actually make money is, I think, when you put the dots together, which today the existing platforms or tools make it hard for you to actually connect, right? Because the data about what happens on planet Earth is actually mostly available. So if you look at how much of the world has been digitalized and how much actual data we have about what's going on, so you should actually have enough indicators to see a little bit about what's going on in the markets. Most intriguing in the end, I still think that it's a bit mean to say it, but the reality is we are much more simple beings than we personally like this to be. And therefore, I think nothing is. This is even more true in trading. When you look at what Google does, they have a really simple it's really simple for them to predict what people are basically doing. But the reality is they're not only predicting it by now, they're also influencing this. And I think specifically if you look what actually happens on the market, there is big players, they have been knowing that since a long time. And of course, in the traditional world, you needed to own a media house and to own a bank, and I don't know what else to make the cuts on these informations. So this was probably limited to a very small amount of people. Now, while today, of course, and I think we have another very fancy situation right now with Wall Street bets that shows this pretty quickly. If you actually are able to leverage the existing infrastructure, and for me infrastructure, that's everything, right? That's not only the actual physical infrastructure, there's also the infrastructure of knowledge, the infrastructure of people. But if you are able to harness the infrastructure that exists, then look at what Wall Street bet has done. They just harness the infrastructure of the internet and social media, period. That's it. But doing exactly these things on the market, harnessing these problematics or finding how easily to influence certain things are, and or how easy people react to certain things, and how much prediction possibility that you find behind this. And then what I really find intriguing is that the markets will punish you when you are greedy, and they will give something back when you're not greedy. So it's the same thing everywhere. Even an algorithm has the same rule. If he's greedy, he's gonna fall, and if he's not, he's gonna win. And so for me, the most intriguing situation about all of this is analyzing the situation, finding the gaps, finding the holes of the system, and go into there. And the beautiful part of the story is we every day see new possibilities because it's constantly growing and changing. And with the tools now, specifically in fintech, if you look in the last 6 months specifically on the DeFi area, etc., I think I find the question hard to stop it like that, because I don't know what is more interesting or more intriguing every day. But I would say it's the act of exploiting these holes and really harnessing existing infrastructures to make something totally new. That's the most intriguing part, I would say.
Last weekend on Sunday, it was the first Sunday after Wall Street bets had hit the headlines. And I noticed on my social media, which is tailored towards financial markets, particularly cryptocurrency and precious metals, that everybody was becoming extremely greedy. One part of that greed was they thought they were actually going to take down Wall Street via investing. That's like peak greed in my mind. Now they're not only looking to like make money or get rich, they're actually looking to take down the system. That I'm not sure came from a rational line of reasoning. And then second thing I noticed was that everybody was getting very, very greedy in the silver market. People thought that silver was going to skyrocket. Quote, it's happening. I heard somebody say. And it was easy for me to get caught up in this emotion. But
Mm-hmm.
but having kind of been watching that market in particular, the silver market for like 12 years, I knew that now was not the right time to be greedy like everyone else, but it was the time to be cautious. And so what we saw on Monday morning was that silver did indeed spike rather Sunday evening. Silver spiked $2 right away, only to then decline back
Yes.
down to where it
Yes.
had been.
Yes.
And I think
Yes.
a lot of people now are frustrated. I'm seeing that they're disillusioned. Quote, what's the point in investing in silver? Blah, blah, blah. So it was just interesting to see that in that moment when there was a lot of greed, that was the moment actually to, if not be cautious, just be unemotional. So I'm curious, what indicators do you find most intriguing in the cryptocurrency space?
Well, to be dead honest with you, I would refer right away to what happens when you analyze actual social sentiments in a multitude of ways. The the data which is actually flowing on social networks, and you can combine this with a couple of other very interesting factors. Um, I give you an example. So we have a prototype running where we used of a project of actually there is a couple of projects. They do social sentiment analysis when it comes to crypto. And we found out, and it's quite funny, but I mean, crypto is still a very strange market, and it's some things happen very linearly, let's say. So those work, but in general you can say that, and I think this worked very well for Wall Street bets as well. With all of these things, it's always the same. Usually the greedy people, they for some reason also come pretty late, because at the beginning they don't believe, then they watch others make the gains in the beginning. Their greed hits them even worse, and then they enter it when it's actually, in my opinion, already too late, because I have already made my trades by that time, and I'm just here for the fun with the algos, and they're all gambling this stuff and all of this emotion. You know, I don't think it's healthy to be ever part of this because it becomes unpredictable. And don't I mean you have to be honest also about the you know uh, the reasoning behind why somebody is doing something. And I think Wall Street bets, the people who have actually had the idea, I did some reading. I mean, that's interesting and cool people definitely to kind of show, how the things actually interact. And I think, it should be okay for the public to do the same thing that you do in the traditional world without being criminalized. And of course, that shows that the existing stock markets, they have downsides. Of course, they do. It's human built systems. All of them are failures. It's constant evolvement to get somewhere, right? So nobody said it's perfect, but actually the interesting thing around Wall Street bets, and then you mentioned silver afterwards, is that so you had Wall Street bets where this total greed, and there are so many factors came together. You have this total greed, right? But it goes along in a year which is absolutely crazy. I mean, there is no comparison, right? And people are emotionally in a state of disbelief, distrust, questioning the system, don't believe the banks, etc. So this was kind of like a relief. It was super cool for people as well as a relief, probably for all the people who believe in reptiles. That's it, and rule the countries. They also felt very approved in all their ideas about how the world works. So all of this came together on Wall Street, but creating a super huge load. But you know, don't get me wrong, this is not, you cannot predict, nobody can predict where this actually goes. The only people who are started early, they will just have a thing that they want to reach with this economically, and then they jump out, and maybe they are in here for the laughs, but that's it. I think that's exactly the way how every pump and dump works. What you just saw on a very large scale happens on the small scale every day on all the signal services and whatnot. I mean, most of them produce signals that would, from a TA perspective, never ever produce any profits. But the reasons why they produce profits is because they have such a big outreach and they choose wisely pairs and situations in the market where their outreach in combination with the greed that their people have will generate enough so that the price goes up. And if you do a little bit of a quick maths on this, you can slice every time when you jump in early. You can slice every time 2, 3, 4, 5, 6, maybe some more percent. I personally don't believe it's very wise to jump for the big percent gains on one trade or event, because you rather be part of all the events with a very small gain and hence run securely. But so the reality behind this is it was a very real, very nice real life example. But then the interesting thing about the whole thing is, so you have all this greed and everything came, and this time it went well, right? The price went up absolutely ridiculously, and everybody goes like happy buggers, and then they place the same thing about silver. And if you look actually at the silver situation, I mean, this could have gone AWOL. I have been studying the silver TA. Went to a couple of people who looked into the markets, and they all said, like, man, if they're going to do that right now and it hits blah, 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 X, Y, Z, it's going to skyrocket. So even from a TA perspective, they grabbed a nice market. The story was nice. Everything was good. But now comes the point. This time, it was not just a stupid social media page that nobody knows in the traditional financial world. This time, everybody knew. And this time, everybody checked this up front. And nobody said, oh no, it's bullshit. No, they will never reach the volume. They knew very well. Hence, probably other institutionals could prepare. And I have to be honest right now, I haven't actually looked in the aftermath analysis and data of that event, but I would assume that you would have seen a lot of people betting against this situation. And you would have probably seen a lot of people acting in a way which would have been very pretty negative for that situation. And still, in this environment of big greed, there is also the problem that there is big distrust. So while I absolutely agree that the people, who are actually, there is probably a very, if you look at the other things, movements on the world in the world, it's also the same, which are loose, right? So you have a couple of cool people, they have an ideology behind it, which is cool. They would actually not do bad things, by definition, and they have some ideological goal that they want to go to. So I think that's actually a cool bunch of people. They know what they're doing, but all the other people that jump on it, that's just pure greed. And you know, at that point, it really becomes difficult. And I think probably on the silver, the greed was played out by even bigger greed who got prepared. So the intriguing thing about the whole thing is that you really see it's an evolving thing. And just because you can get this Wall Street bet done today doesn't mean you can necessarily still do it tomorrow. And I think that counts for a lot of situations in the markets as well. So it's also, I think that it's interesting, but probably they destroyed more with this movement of Wall Street bets on the long term for themselves than they gained. Um, but that's how things usually go. I hope this gives a bit of an idea of what I think about the subject, but that's basically, for me, it's a real world example of a lot of the most basic behaviors of humans that you see interacting. But the other thing that you see right now, which is really interesting, is actually the markets are in a lot of ways more stable than you would expect. I would have expected this to have much greater consequences, but it obviously don't. And also, despite of the fact that somehow people just got like approval that the markets are rigged, still they throw their money on it. So it's quite an ambivalent situation, right? So it's interesting to see what the people tend to say and what they then actually tend to do. But that's also two absolutely different things. We know that also from our analytics. Like people definitely do not act in the same way that they speak. Specifically, not if they think that nobody knows what they're doing and only knows what they're saying. And hence, it's pretty interesting to see how all of these things actually evolve. But it's more, you know, most of this is social studies than economics, I would say. But of course, it helps when you get the economic knowledge as well there.
What are you looking for?
Well, you know, we don't like there is no one social media indicator for sure. And I think also that even giving the exact numbers of indicators, you can still absolutely misuse them. So it's really the combination of indicators in every situation. But that being said, just one cool example is what you can see on Lunar Crush, right? So you have a mix between mentions and positivity sentiments and a couple of blockchain informations that lead to a validation index, right? And it changes pretty quickly. But if you look then, if you combine a couple of such projects, right, that have different approaches, and you generate an indicator that is based on the top lists of those couple of projects, for instance, you would be surprised what you can gain when you just enter the top three out of your list every hour and you go out after a couple of percentage.
What would you recommend somebody who's got good knowledge of the crypto industry and the markets, but doesn't really trade at all do to get started doing that? I mean, let's just say that you've got a person, let's call them what are those original Alice? Let's say Alice or Bob. Alice and Bob are in a Telegram group and they are both cryptocurrency experts, but they've never traded. What would you recommend they do?
Well, I think there is a couple of straightforward things. First off, of course, they probably have some portfolio and then look at diversification. That's the first thing you need to make. You need to do the basics, right? So divert a bit, make sure you don't have everything in one stake. That's the traditional part. But then you have very simple strategies like dollar cost averaging. Do the back testing on that and check what you would have made on Bitcoin if you didn't just hodl, but you would have actually done dollar cost averaging. So don't get me wrong, but in crypto, since it anyways just goes up on the long term, or that's what it actually did so far, you could actually, as I said, patience and time, and you would have made the wins. So what I suggest to these people, first of all, is to understand that it's good that they're experts in the field of crypto, because at least they are able to understand the projects and they know if that's an absolute, stupid thing that they're right now touching or not. And I think the most important part about the crypto world is, do I at least know coins? There's many, but am I able to understand if that's a shit coin or not? Because this changes everything. Like, don't get me wrong, but still today we produce strategies, right? Algos that are fit for a specific market, because a bull a bull market strategy will not work on a sideways market strategy and the other things. So I would suggest to them that you still need to understand the very, very, very basics of trading and what it means to do so. But there is enough exploitation possibility in very simple strategies. You could start off with a very simple set of rules that you put yourself together by what you trade. And I actually found, like, I've seen many people get into trading over the last 2 years because of crypto, and the winners were those who had patience and who were on point, having a plan, and they just executed this plan, and they they stuck by that, right? So that's pretty much the basics. There is tools that can help you, but to be honest with you, even the best algorithm platform in the world by now will burn your money if you don't know what you're doing, because you don't know what you're doing. And so far, like, no real bot gets this away from you. There is a couple of approaches, I have to be honest, like that. We have these robo advisory wealth apps by a lot of startups, which I think is a super great approach. Uh, but like, that's just, like, in a lot of ways, you don't have the full influence, and therefore you will also not get the understanding behind it. So I would call this trading. It's just some kind of investing. If you want to trade, you will need to get a set of base understanding. For that, there is a couple of good platforms that give you a base set that you can get into in a very short time. It's definitely good to watch a couple of YouTubers or something, but then yet again, there is a couple of platforms that actually, if you really want to get into the subject, give you good opportunities. And we know there is a lot of algorithmic trading platforms. It's pretty hard, actually, probably, to find what makes sense. I would suggest to people to not look for those that show you, all the potential profits that you can do in the first place, but rather tell you why they give you the best tools to be able to run and produce these algorithms. Um, what you're looking for is a place that has technical standardization and transparency. You should avoid, trying to learn how to trade with stupid crypto bots which are intransparent or whatnot, because that's probably going pretty wrong. Um, it's a step-by-step process. You will need to fail. You will need to fall for all the things that the markets offer you to fall into, because that's learning. But I think that right now there is a couple of emerging things and approaches, and if you then look at the magic of, yet again, social media, and this was a thing that was really hard. I mean, eToro had this thing. It was like one of the first companies who brought, like, this really finance platform along with social media stuff, but there they have a bit of a special business model. But I think the mix and the reality, what we want to have, if we're looking at the best possible tool to trade, it's probably something where I can see what other people are doing, where I can profit from what other people are doing in forms of what they generate, not only the data, but algorithms. So something where you have a marketplace where I can test my stuff, where I can really, where I have all the tools to actually test and investigate if what I'm buying makes halfway sense. You still have no guarantees for profits, but at least that takes you somewhere. However, That being said, I believe that now the tools are changing substantially because the layer of infrastructure was built. Now they're working on user experience and putting all the dots together. And in form of that, I believe it's not going to take long, and you will see very simple platforms where you don't need to know too much, where that will give you such a transparency on what has happened over the past that you will have so many indicators showing you if something is valid or not, that you should be on a very positive side. However, then the interesting part is if everybody trades profitably, what does that do to the markets? And that's a very interesting subject, but it's then getting more philosophical. How the society works and how the economy works is how you identify potential profits and how you estimate your risk. And then you're using TA to bring it home. I would say that's pretty much so. You need TA a bit because this is what saves you from making absolute bullshit in a lot of times, and also the thing that helps you automatically find the right moments to enter and exit. However, are you doing something generally really stupid or not is rather something where you also need to understand economics. So don't get me wrong, I think it's a good mix, and but that's also not true because it really depends on your style of trading. There is people that go with pure mathematical formulas. They don't look into the economy and the society at all, and they're very successful. There is people who go by a simple book of having patience and don't act for quick things, and then they use very simple strategies such as dollar cost averaging, etc. But yes, you should probably understand a bit of TA. I think it hurts nobody to understand these concepts. There is a variety of things that you can learn about. What to see actually on the pictures of the market. And I think this is a great tool to quickly know about in what situation you're right now at, and how to really bring these profits home. However, you are going to make errors if you have no clue about the markets and so forth. I mean, uh, to say it stupidly, like if you don't know that the crypto exchange where you put your money on is, a black hole, then your funds are gone. So that would probably have been economical knowledge not to put it there. Same for some market pairs, probably. I mean, you can have the best TA in the world, and when you believe that somebody else will let you play on a shit pair for forever, making gains, then you're pretty wrong because probably he's going to find you. And that's also maybe a very interesting part, actually, that you're going to see if you're really botting. You will see pretty quickly that you have bots and counter bots, and so yeah, the trying it. I definitely give the advice on every scale. Yes, have TA. Yes, look into these basic concepts, but yet again, be patient. Have rules for yourself. Only gain with what you have. Don't fall for FOMO. All of these basic things still give people the best tools to go, and then it's experience, and then everybody develops kind of his own style and truth. So it's interesting that we saw in our analytics that, and that's a very interesting fact, just to outline that quickly. There is no role, there is no defined roles or ways of traders. The reality behind this is every trader in the world thinks his style is the best and the only one that there is. A little bit similar like football players or so. Um, Nobody will actually say, "Oh, this other style has a right to exist." They all like. I have had a guy in my team. I have a guy in my team. He's a total pro on TA based algorithms, right? So for him, this whole thing of social sentiment and whatever just simply doesn't exist. So he don't even think it works, despite of that he sees the result. So it's really hard because in the end, it's really hard to produce one tool that would fit for all the needs because people have just so much different perspectives on what is the right way to do it. So in the end, there is no one way to do it. That's the answer. You need to make your errors. It's probably good to have a coach, but yes, as I said, a good base of TA understanding, a good base of economical understanding and socio-economical understanding is probably what you're going to need to be a long-term successful trader, I would say.
What problem were you seeking to solve when you started thinking at the very beginning about MachinaTrader?
I I wanted to solve I wanted to lower the level of my frustration. That's a funny question. The truth is, this was built because I was so frustrated because nothing worked. As I said, so you have a variety of crap. But first of all, you don't have one place where you can go and you get all the tools that you would want to trade, right? So you have the different exchanges with different tools and features, and then you have a couple of softwares that you connect to them, and maybe strategies or bots and blah 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 in a whole different um, all different ways and styles. But there is no product where I can go and say, okay, now I'm fit for doing the industry, for doing stuff in the industry of crypto trading. It's not there. Like you will literally need to build things up by yourself, acquire data, download, build databases, have web servers, do this, do that. Like you have to study IT to get that on the road, which doesn't make sense at all. And it's even worse, like not even for the pros, that's only the problem. It's still up to date, the problem for all the users as well. How many websites do you need to open in the morning to understand the crypto markets? It's probably a dozen. I mean, this makes no sense at all. I mean, it doesn't make sense that I have my portfolio distributed on I don't know how many things. So to say that very quickly, in this decentralized market, we see two problems. One is that the standardization, despite that it's actually new tech and new technology, standardization again was left out. So that's good for us. Great opportunity there to get a layer of standardization in, um, because like it's still up today. I'll give you an example. You can buy bots for Binance. I mean, why? Why not the bot for the top 10 exchanges? I can tell you why, because they have no standards and that makes it quite inefficient to code that, right? So the layer of standardization will make it more efficient. So that's one point. And the other point is you really want to have this one-stop shop. And this one-stop shop is not only the tools, it's also the presentation. And basically what we found out is that, and it's to say it like that. So we are still centralized beings, right? So while it is from a technical perspective and from the trust level perspective and the philosophy, a good thing to decentralize things, absolutely. We can't deal with that because we still have two eyes and a brain and a nose and a mouth and two hands that are more or less in the same location. So that being said, we should have user interfaces, that honor this reality that we are centralized beings. And unless that changes, I think it's very important that there is a shift change in how we look at the software and tools that we use, because I don't think uh, you have um, you have 1,000 tools for doing one job in the industry. It should be that you have industry specific platforms that allow you to do everything which is related to all the business and industry, which is optimized for this very cause that you're in. And I think that's what we did. We combined this. We created a standardization level. That's the most important. So building a strategy on MT is something that you can execute on a multitude of brokers and vice versa. So that's an important layer. And then all the this capability, that's the last point, but this capability of all the other players to unify all the emerging technologies that we have on the market, like really, not just give your users one pre-calculated machine learning model or whatever that produces some indicator, not only allowing them to use the indicators that you give the platform, but let them build custom ones, not only give them the data that you give them, but allow them to take every data from everywhere, etc., etc. So I think that's the important thing. We give the tools, we give you the playground. Um, so you're about to play, and that's what we want to engage you. So we try to build the environment where you don't need to think about how to do something except of if it's about how to trade in your algorithm, and all the other questions about infrastructure, about differences in standards and whatnot, that's removed away. And hence you have a very good basics to do not only the development but also execute this on the markets and control your portfolio.
What were some of the fundamental indicators that you first felt that you needed in order to accomplish this?
We haven't been, don't get me wrong, but we haven't been looking at it from that point of view. But this is the point of view from an actual person who wants to build a trading bot. If you want to build a trading bot, and that's what all the people have done mostly, is the problem is you're thinking in a limited way. And because you're trying to make profits, and therefore your goal is to get a strategy together as quick as possible to make profits. And but that's limiting you in thinking when it comes to infrastructure, the greater picture about the problem. Um, and trading, it
Here's the way I do
distracts you.
that. I wait for Elon to tweet about Doge, and then I dive in. I'm just kidding. Go ahead.
That's the very simple variant. No, but in our case, and it was a base philosophy for us that you need to understand. We said if we focus on trading, we will not be able to build the best trading platform because we'll be distracted. So actually, we're not trading too much because we're focusing on building the best tools to have other people build the strategies on top of. And it's a totally different situation. So at MachinaTrader, most of the time, we're thinking about how the internet infrastructure in its basic works, how we can harness that, how we can leverage this situation, and how we can automate the processes. So in MachinaTrader, you have an automatization behind for things that when you start trading, you would probably not even think about. Let me give you an example. When you go to some of the existing bot platforms and you create there your strategy or you rent your stuff and you execute it, you will not think a second for, oh, and actually, where in the world is this computer now that executes this strategy? And how far is this one away from the exchange where I actually execute this on? And that's a very interesting thing because there is a lot of profits to make if you're quicker than others, closer to the exchange than others, etc., etc. You have better computers than other, your strategy is computed quicker than others. There you get the real gains that the others cannot acquire. So if you're using a platform that allows you to only trade on I don't know 5-minute candles on an exchange, which is in reality on the other side of the planet than where the cloud data center is of where your platform is hosted, then you have an issue. So in MachinaTrader, you would actually have the option to say where you want to have it, and it deploys it there. And it deploys not only one algorithm, but maybe, I don't know, 20, 100, or whatever. And so the dynamic scaling of the actual system by nodes, going out there and distribute your workload over not only multiple computers, but multiple geolocations and data centers gives you a power on the markets that others simply have not got because they don't have this infrastructure. And if they have, it's still a very stubborn infrastructure, not very dynamic. So we give you this fully dynamic infrastructure that allows you to harness all the capabilities and power that the modern hosting vendors give you, such as AWS and Azure, and we put all of this with a focus for trading. And so when in MachinaTrader you have your strategy finished, you have a lot of more options now on how to execute them on the market. So it's not only how you can build a strategy, what language, what tools, what data sets. It's then how can you execute this on what infrastructure. And we see ourselves as an infrastructure solution provider. Hence, our focus was not to say, oh, we need this, and that indicator, because we leave this to whoever builds a strategy on our platform, and they can put whatever indicators they want. But also a very simple answer for you is MachinaTrader by definition by today has available all the TA indicators. You can build your custom indicators. So this is an open and fair play. I think it's the number of indicators. And personally, I see MachinaTrader as an orchestra, right? So you have hundreds of different players in your orchestra that all do a tone, and all together it produces music.
How do you see the future of trading in cryptocurrency evolving with tools such as MachinaTrader?
So this is actually going to be interesting because the suggestion in the room is that there will be something happening at some point in time. At least that's what I say. Um, at some point in time, the intelligently managed volume will be so big that it's only going to be other like actual real world events that will have an impact. So the better the trading systems become and the platform and the larger the volumes, the more the markets become actually stable. That's the logical consequence. So if you think this to the end, it would mean that despite any special happenings, you would have totally stable markets, which potentially could be also a good thing. But it would also mean the death of the markets. So we have a philosophical problem here. It's a little bit the same problem than we have with encryption, right, and security. Um, it's a great thing to envision, quantum computers. The problem is once we have them, we make everything we did until that time invalid from one second to another because you can decrypt every encryption in an infinitely quick amount of time. So you take this and you put it on the situation of the markets. At some point, they're exploited and it's just over. But what's going to happen then? It's a very difficult situation to answer to you. I think there is going to be entities that will have a word on this, and there will be probably measurements so that this impact needs to change. But this is now really getting hard to predict. But on the long term, the more intelligently managed capital you have, right, the less unstable this whole situation should become. Because still, in the end, we can say, yeah, it was the computers who brought some of the biggest financial crisis that we have had, but that's not the full truth. The start was the people who entered crap into the computers and didn't see that they were going crazy for days until it happened. So this is probably the situation here. I believe that this will be a challenge for society and for economics in general at some point. But until then, there is a lot of opportunities.
And until then, I'm curious if Bitcoin has been such a top performer, it's been the best performing asset on the planet for so long. And I constantly hear the advice that forget trading, just stack sats. What then, like, what should one's goal be in trading if they have chosen to pursue that path and not just stack sats?
this is a, this is a difficult question. I don't know. I think it's more a philosophical question that it's difficult to answer.
Like
Really
if I
difficult.
if I if I had to just guess, I think for a starting point, it might be just to, of course, always be looking to acquire more Bitcoin if you're going to have a crypto focused trading philosophy.
It's actually it depends. I don't like from the crypto visionary side, I totally agree with you. If you want to stack satoshis, then start that first thing you need to do is start to think in actual satoshis. So then your base currency is Bitcoin that you're thinking in, right? And I know a couple of people that they have this lifestyle, and actually they're quite successful on stacking Bitcoins. But on the other side, it really matters where you come from. And what your actual, if you really want to stack long term, then yes, think in satoshis, and that's probably the right start, because then you're going to see it from the right perspective. But then you're kind of gambling on the fact that you believe that Bitcoin is going to be the future. And I don't want to say Bitcoin is not going to be the future. I very well believe it is. But keep in mind that Bitcoin is not a cryptocurrency with many use cases, right? And there is players who have an issue with the fact of what Bitcoin does and that they don't have control over that. So despite all magic that we've seen, if you stack only Satoshis, you're also saying, I fully believe that this is going to happen. And this is by its nature nothing else than a bet. So you should be very aware of on what you're actually betting. And then there is other philosophies where you make cuts and put it, in, get some of it in fiat and whatever. And then your philosophy and your perspectives are different. And I think then also your style of trading changes because, the pairs also behave differently. I mean, if you look at how US dollar pairs behave versus crypto only pairs, that's a whole different ballgame. There is different situations. The markets behave differently. It's not the same. It's not the same thinking, I would say, in a lot of occasions.
What are your thoughts on hedging and safe havens beyond Bitcoin? And then any closing comments about the future of MachinaTrader?
Well, um, why is Bitcoin increasing so much in price? Because there is a fixed amount available, and people found out that it's not so many. What do you think happens when people understand that gold and other precious metals are actually what they cannot just create out of digital digits, and that they need these things to build the tools and hardware to do all the fancy digital digits with? And I think at that point, gold gets a whole different, it's in a whole different light. So for me, it's pretty clear. Like one pretty interesting idea I have about the situation is that it's actually quite in the favor of the financial industry. That gold is not anymore this this uh, this long-term safe haven because they want to start play with it. Because since it's that sparse and since we have such a big need, and since we are putting this in very small amounts into billions of devices, making it really hard to get it back, I think every wise investor would know that on the long term, probably gold is going through the roof. And yeah, so story to be told. I would say gold's definitely an asset. Silver is an asset. There is a couple of others I can tell you, but it's very simple. You just look what they build into CPUs, and that's pretty much the buy list that you should have for your portfolio, because that's what they're gonna need if they want to fly to Mars. And if Elon want to do all his fancy stuff, he's gonna need all of these rare earths. So that being said, I think that's definitely one of the reasons why you would also, from a point of the actual financial industry, you would want to get away from having gold, a more or less stable thing to store value, because actually this is going to be a nasty investment situation there. It is already, if you look at how much gold we trade and how much is actually existing. So I think they want to get away from this situation, that they have real issues there, and they want to have gold be treated as what it is, as gold, as something that we need to build our tools on planet Earth. So it's a resource, and definitely Bitcoin is not a resource. And I think so we see a shift here on how it's being looked at, and I think that's what the financial industry is actually why there was not even more pressure against Bitcoin, because in the end, actually, the concept of Bitcoin is exactly gold, and we would want to get away from having gold what it is today, because it's a resource and we need it to acquire other goals. So that being said, gold at some point will probably shoot through the roof, and I think for Bitcoin probably it will have some point where it probably don't make sense that it goes up more. I don't know, but so the Bitcoin is actually where it should be, and gold is transmissioning to where it should be. I think that says it pretty well.
Do you have any concluding comments, especially as it relates to MachinaTrader?
Well, on MachinaTrader, we are trying to bring all of the knowledge that you've just heard somehow into a form that gives you one technical base to envision these concepts with other people, share your concepts, or make them and rent them out to other people. We want to engage a global community in building algorithms and exploiting all the possibilities on the markets. We do actually It's a bit stupid to say that, but we have built basically the infrastructure that you need for, things such as Wall Street bets, because we are the social media. You can connect, you have the tools. Um, so I think that once we're opening our doors to the general public, we're going to see, hopefully, some pretty interesting things going on, because we are connecting all the different entities on the market. And we have managed not only to build all the tools, I think, is my opinion, of course, it's other people's to judge that, but I think we have actually built the ground where you can, in a unified way, bring all the people of the different consensus together and have them use one platform for this industry problem. And our personal goal is to build a huge orchestra. So we're not never talking about a single bot or indicator, because we don't believe that there is a holy grail. However, we believe that a perfect orchestra will play a very nice symphony at the end. And this symphony, in my point of view, this is the holy grail. I think prediction is possible of the markets. I think deep prediction of the markets is possible. I think it's not only possible for minutes. I think it's possible for months. Um, that being said, with all the concepts that I believe in, we have tried to build a platform where you can put these visions into place and share them and make money from it. So I hope that we have built a environment where we see a lot of creativity and where we see a lot of different strategies pop up. And I hope even more that we start to be the binding place between the traditional approaches and the modern approaches. And that being said, I think we're going to see a very interesting second half a year.
We've been honored to sit down with Thierry Gilgen, an enthusiastic trader and founder of MachinaTrader. Thank you so much for joining us today, Thierry.
Thanks for your time. It's a pleasure to be allowed to share a couple of words. Thank you.
Pleasure's all ours.